The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. We have the Dow Industrials down 27. Nasdaq is up down 5. S&Ps are off 2. We get gold down 5.20. Silver is off 9 cents. Bonds, you get the 10-year off 10, the 30-year off 16, and King Dollar is down 70 ticks. The euro is up 20. The yen is flat. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You'll see the banner on the top and on the side. Hit that banner. You can bring up the exchange. They'll put $25,000 of funny money, paper money, into your account each and every trading day, 1 to 2 Eastern Standard Time. Darrell has an outstanding show trading the Nadex platform each and every day. Of course, on Fridays, 10 to 11, we do the exact same thing. Darrell Martin, what's going on?
How's it going, man?
It's going great, man. You having a good day?
Yeah.
You ready for a good weekend?
I'm very... Is that a long, short week this week?
Yeah.
So, yeah.
Yeah. Well, there's no doubt. And what you have, folks, is this. Okay, so we have the end of the month. You have a short week. You have summer trading. You have all of the above. And what happens with summer trading, of course, is that Fridays, Mondays, basically are slow. They're particularly slow. What ends up happening is that they're particularly slow in the aspect of if the market hasn't moved Tuesday, Wednesday, or Thursday, the odds of it moving to Friday go down dramatically. And that's up or down, by the way, folks, okay? What is going to get intriguing here is that we've had the S&P continue to go higher, no volume whatsoever, when the small caps have only done, they haven't even done a 50% bounce from the coming down. And the NASDAQ 100, and this is the one that we really want to watch closely, because the NASDAQ 100, I would love to basically see it hit. Let me see if it hit it yet. It hit it. Beautiful. That's what we needed. We needed the NDX, the 3Qs, folks, to get into the 91.36, and we did it on the open. We had 91.38. Because what you need there is that test number one. We'll see whether the test is successful or not. The last time that the 3Qs were up at this level, it had light volume, number one, couldn't handle it, stayed up there for about 7 days, and then, bottom line, turned around and came down a quick 10%. So we'll see how it handles it. Right, thus far, what we have is, let's see what we're talking here. We're talking 154, let's say I do 3 days. It's going to be close. The volume's going to be close, on a weekly basis. Particularly because with, you got to add in that other day. But it's going to be close. 154, let me just see something. So if I take 154, we had 30, 60, we had 90. So 90 times 5, that's 150, right? No, 145. So, we'll see whether the volume comes in or not on the weekly. On the dailies, right. It's light beyond belief. And, we'll see how this weekly comes in. Because what we do have is that the February 5th low, as well as the low that got established on the 15th, has a high volume. And that baby's going to get tested once again. So it's going to be a wild one, no doubt.
We got some oil moves today already.
Yeah,
oil's been going.
Let's take a look at oil, because what we do have, if you're trading on the Nadex platform, folks, okay, oil is one beautiful thing to trade, CLN4. Because the spreads are very light, number one. Oh, yeah, look at that move, man. 103.51, yeah. All you need, on whether you're going long or short on that platform, folks, is you need about 12 to 14 ticks. And it's got it, man. What's interesting, Darrell, is that yesterday was a big move, huh? 102.66 up to, yeah, that was a $1.20 move. That's a big number, man. I like that. I like that aspect. I really like the aspect as that when you explained it to us last week, how when you do have flat markets like this, you can still basically go inside that Nadex platform and make a few dollars, which is a whole different ball game in the context of normally how you can trade.
Yeah, I'm trying to figure out if oil's based like we're about a one deviation move, right?
I'm sorry, what?
So I'm just trying to look over. You talking about the combinations of putting the trades together. I'm trying to put together a combination here on the oil one. So sorry, I got distracted.
No, that's all right. So if we look at oil, if we look at oil intraday right now. So intraday right now, what I would wait for is this. Okay, so we just went. Let me put this on a 2-day. So we're at 102.95, and we just made 100% move going down to the lows of 0750 yesterday morning. You just had a spike. So it's a waiting game now. I mean, the sell is at 103.47 or something. Do you know what I'm saying?
Right. So basically, you're waiting for that pullback up there.
Yeah, because watch this, folks. Okay. 100% move for a move. This is something, this is where Darrell deviations come in. I don't know if that's the deviation, but what happens on 100% move for move, that's up or down, is that the market, it gets tired. That's what it really does, okay? So it's going to move the opposite way, no matter which way it's going. And in this case here, we started at 0750 yesterday. It was 102.61. We get down to 102.72 today. Well, here, then we shoot all the way up to 103.94, and we shoot back down to this 102.72. Now, the way this is structured, is set up, what you would love to see, I mean, the real trade here would probably be Monday at the 103.94, because we have volume intraday up there. So it's like, so that's the first part. Well, that'd be the second part, because the first part is, you see how we just came off that low? If you're watching Target TV, or if you're in your car, I'll explain to you if you're in your car, folks. We just came off that low at 9:50, 10 minutes before we got on, with juice. So it's like, okay, hold it. It's gonna pop up a little bit. The first pop will probably bring it to 103.46, but the trade is the test, because at the high of yesterday, folks, okay, we had 9,300 contracts. So that would be the ultimate, basically pulling that baby in. Let me just see something else. This is going to get interesting. So if I take, watch this. What I'm going to do here, folks, and this is where this gets cool. We have the, check this out. So what I just did, if you're watching this, I put up the TAS. Now this is on Bloomberg, but you can test drive this right on our site. This is John Logan software. And what you're looking at, this is the TAS Market Pro, and they're profiles, folks. So they're bottom line resistance, support, and all of the above. And when you look at that high of yesterday, right, would be that box is set up because it broke the bottom of that box. That box is set up. That would be the sell, which is a trip. Do you know what I'm saying?
Okay, yeah, I haven't even, I've seen this a lot, but honestly, I haven't had a chance to look at it.
Yeah, it's pretty cool, man.
Now, does this only work in Bloomberg, or does it work on...
Well, this is what happened. This is what's so cool, folks. If you haven't test drove this over at TFNN, right, this is a very expensive system that John has that is on a Bloomberg, okay? He's got about 15,000 subscribers on there. And then what just happened is that we made a deal with him, and then he put it on e-signal, so it is much, so the bottom line, you don't need a Bloomberg to use it anymore, okay, which is huge.
Okay, yeah.
And what it does, and it started out in the commodity market, in the futures market, in the currency market. Now what he has done on TFNN and on e-signal is he's also put the S&P 100 stocks in it. Okay? So when you get used to how this works, okay, it's a rules-based system, and it's a yes or no. So it's really cool, man. And these bars, folks, are very clean. Now, if you're watching the bars on my Bloomberg right now, this is actually harder to look at than what is on TFNN, because on TFNN what has happened is that he's turned around and made this TAS signal box. So as you're going across the signals, it'll tell you exactly what it's saying. Like I'm just crossing this and putting it on the Bloomberg. It's telling what you're saying. But on the TAS signal box, it's much cleaner. It's easier. It's beautiful, man. So, and what it does, it puts together. This is what it actually does. Okay, so Stottlemyre, did this years ago, and depending on how long you've been in the marketplace, everyone and the CBOE, they used to have these deck of cards. If you remember, Ed Young, Ed Young passed away, great guy, but Ed Young was on here a good 14 years. And I'd been with him many times down on the floor, and everyone had decks of cards. And the decks of cards, folks, every day, they knew where the buy or sell would be. Now, when I say knew where the buy or sell would be, what happens is that, yeah, they can break those levels, but when they break those levels, you know you're wrong immediately. That was the key inside them. And that is still the key inside of this system. That's what it comes down to. That's what it really comes down to, which is pretty cool. Now, what has happened is that John bringing it into the S&P 100 is dynamite, and I'm sure it's good. All the stocks are going to be there. But if you go over to our website at TFNN and test drive it, you're going to see all those stocks are right in there too. And so they basically set up buys or sells. That's how it's set up.
So what would you do with it right now? How does it work right now?
Right now, when we're looking at this right now, that red line at the top is the sell. See, it already broke the bottom. Okay, so that's saying that profile that said, okay, that's broken. So when you come back up, what is that? What that is saying is that, okay, that is a sell area, and all you do is you put your stop on the other side of it. Now, the reason I brought this up, because what I would do, I'm going to bring this into intraday again, is that when we bring it intraday, we turn around and we say that, oh, yeah, look at that spike up there at 103.94. We have volume of 9,300. So what I do is this. I would let it go up there. If it has lighter than the 9,300 and rejects the price, it's awesome. Intraday, it's telling me that that's the sell right there. The profile's telling me it's the sell also. And what happens is this. The longer range, if you can basically trade with the longer range, you're 10 times better off. You know what I mean? Because that's what it comes down to. Because, we're all geniuses if we're on the right side of the trend, right? I mean, that's what it comes down to.
It makes everything easy.
It does. I mean, it's that's what happens. So, it's neat, and you can do that. The way he has this set up. Like, watch, if I put gold up right now, let me just see. You're going to see that gold has never made it on the other side of this since 2012, which is pretty intense.
Okay, yeah, I'm starting to see.
GC.
Cry.
GC. Active. GCA. There she is. You stay right there, folks. Look at that break. See how far that? It just couldn't handle it.
Can you break that down to... Well, I'll ask you when we get back.
Stay right there, folks. Darrell Martin and Tom O'Brien, appreciate you growling and prowling with us. We're coming right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to TAS Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us. We have the Dow Industrials right now off 16, Nasdaq's down 5, S&P's are flat. And, folks, don't forget, every trading day, 1 to 2 Eastern Time, Darrell has an outstanding show right here at TFNN. And once you get your Nadex platform up, you want to come over to TFNN, you want to test drive Darrell's Analyzer. What the Analyzer does, it's not going to tell you whether to go long or short. What it is going to do, though, when you're looking at all these Nadex contracts, it's going to tell you what is the best contract that you should be trading probability-wise at the time frame, whether that is with a 2-hour, 5-hour daily. It's an outstanding piece of software. That's only part of it. The deviation levels in it, no matter what you're doing, actually, the deviation levels, you can be trading equity, you can be trading anything. The deviation levels, folks, are amazing because whether you're going long or short, or you are long or short, what ends up happening is that's going to tell you where you should be taking some money, and it's also going to be telling you you should be using it not to be laying on more trades at those deviation levels, because your probability, those that you're going to get a turn in the market at those particular points. Yeah, you know what's wild, Darrell? Think about, I think about this so many times. It's like, does math run the world? Do you know what I mean? It's like, how do these numbers work? Seriously, right?
Yeah, it's pretty crazy.
It is, because it's like, how do they go to those numbers, bounce off those numbers? It doesn't mean they're not going to break them, folks. And what I've found is this: when you have high volatility, folks, right? The numbers work even better. They just go. I mean, it's just amazing. And as Mark said in the den, Fibonacci flows throughout the universe, and it absolutely does. It's just amazing, man. It really is. Oh, look at this. With this contact, let's go over to the gold market right now. So we get Friday. Friday, of course, in the gold market, folks, is one volatile animal. And they just took gold down another $4. We'll see where they can keep it. So gold's down $9. We're at $12.48. Now, it's an ABC structure down to $12.24 on this contract. That's the number. What's going to get interesting here is that when I was looking at this yesterday, in fact, let me go to the GLD, because we have a divergence. And this is what the divergence is, folks, is that the silver market, number one, hasn't been breaking lows, okay? Gold, the contract, the GLD broke the swing point, ABC structure on the way down. But when you put this up, when I put this up and look at it, it says, oh, man, are you going to go into the highs of the lows? And that's, many times that's exactly what gold likes to do. And so we'll see if, in fact, the GLD, right now we're below 120.77. We're at 120.23. If we rejected that 120.77 today, that would be a big number, man. That would be saying that, guess what? They can't drive it down. The reason I'm saying that is this, is that low there has 63 million. So, I'm talking about the high of the low now. That's 63 million. Right now, we're only dealing with, you're dealing with 10, 21, 7, 14, 20, 7, 14, 21, 28. Yeah, we're dealing with, we'll probably get 35 million at the end of this week. And that's counting. What I do is I always add in that extra day, that's like 35 million. So 35 million against that big number is a huge number. So let's go to silver for a second, because silver looks like it just, and as our man Jay in the den says, Nadex working sweet with gold down. There's no doubt, folks, okay? If you're trading high volatility, man, that Nadex platform will save your life.
Yeah.
Okay.
You can go in that way. You can trade it, and you can. The way it saves your life, just to explain for those who don't know.
Yes.
It caps your risk.
Right.
And so you go there with capped risk, and if something does just bounce right against you on craziness, you're good, and you can go with less money and capped risk. And that's the biggest thing. It's not ever going to get blown out. Talking about, oh crap, there went 10 grand.
Exactly.
That type of thing.
Exactly. And if you equity traders, that doesn't happen. Hopefully it doesn't happen to you. Future traders, though, folks, 10 grand can go very quickly, depending on what the
It's
account
amazing how fast 10 grand can come and go.
That's right. Or if you're trading a lot of options, that's what happens too. Now, silver is going to get interesting here, and this is why. So the spike low of yesterday in silver, folks, was 1878. We're at 1885, and it's trying to make it down to it. And we got, let me see, 10-minute wise. Oh, this is going to be cool because, guess what? It's not to the swing point yet, and it has to start another bar. And it just lost a lot of energy. It's going to go after it. We'll see. You stay right there. We'll see whether it can maybe get out and whack that baby. This is Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us. Our phone number is 877-927-6648. Give us a call, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Folks, if you haven't test drove that Nadex platform, come over to our website, bring it up, because we're going to go through something right now. I'm not going to trade this, but I want to show you something right now because this is really cool. So we have gold moving, right? So, Darrell, if we take a look at, let's go over this gold contract for a second, because, right, we talk about risk versus reward and how this works out, folks, okay? And I just want to show you the correlation and how you can trade this out. And one of the reasons, well, here, let me show you the correlation first, and then I'll explain to you why I'm not going to trade it just yet. But I want you to understand the risk versus the reward, which is pretty cool. So gold right now is at 1246, okay?
All right.
We had the monster move down was at 1020. We went from 1251 to 1245. We did 9,000 contracts, okay? So now we are on, let me see, that's 20. Okay, so we get 5 more minutes in this bar. So this bar here, we're on 5,000 contracts versus 9. Okay, so that's still too much volume, okay, folks? So that's saying, like, yeah, you might get a bounce, but you're going to be back down to the bottom again. But I want to show you something. So if you go over to if you're on the Nadex platform, come over to the platform and first go into commodities, then hit gold. Now, as you're hitting gold, you're going to hit basically, first you can look at the 10 to 12 one. That's the one I'd like you to look at. And what you're going to see, which is really cool here, okay, so check this out. When you want to see a spread, okay, it's pretty amazing because your spread right now is not that bad, okay? We're dealing with 1246 to 1247. And in that aspect, you'd be basically, I think you're risking about $45 to make 105. That's what it comes down to. $45 to make 105. Yep. Now, that, granted, folks, you only have until noontime. What happens in the gold market, however, though, that is, that's pretty easy in the gold market. Now, I still wouldn't buy that, but that doesn't mean by the time that we get off the air, we get another 35 minutes, that may not set up, okay? It's just not set up yet because of the fact that this 10-minute bar will probably do as much as the last one did. Or it's going to be a close call. Right now we're at 5,400 versus 9,000. And what you want to see, folks, before you buy it, is you want to see a rejection of lower price on dramatically lighter volume, not a small amount, on bounces like this. But you can see, in the aspect, just so I can give you an idea, too, the difference is you're risking $45. You want to go in the futures market, guess what? Let's see. That would be, the correlation would be, to buy one contract, folks, in the futures market, okay, is $6,600. So it's not apples for apples, but the bottom line, it's still, the risk reward is dramatic.
So we're trying to basically you're trying to figure out what's the exact. Yeah, I mean that's only, if you did one contract that'd be 450, like 4.5 points.
Exactly. 450 versus 6,600, folks.
Right.
Which is amazing. Okay, it's absolutely amazing. The thing that is pretty wild here is that, let me put this back for a second. See, I think this thing's going to get rejected, man. This would be so cool, folks, in the gold market today if we do a rejection, particularly because this is what you have. When you have an ABC structure on the way down, and you're getting a rejection, but we're getting a rejection at the highs of the lows, okay?
Right.
It'll take a while to build some cause to get up, but that's about as devious as you can get.
There's a lot of premium built in right now to gold too.
Oh, there is, man. It's, and that silver, you have to watch the silver. See, because the silver they should be taking the silver apart. I mean, it doesn't make a, okay, so this is cool. So let's see, silver-wise, what we've done here. So see, we're going to be back down here. This is interesting. Don't bite yet. So silver, the first leg down did 1,600 contracts. We have a minute left, and on this leg here, you did 1,300. So
we're at 1.5 deviations right now on gold.
Oh, isn't that cool?
Right at it.
That's cool. See, that's cool, man. Okay, so now
1244, like 0.4.
And so what's cool about that, folks, is this. So when you put this together, you're 1.5 deviations. What you love to see, you have to see one more smoke down and get it to 2 deviations with light volume. That would be the ultimate. Do you know what I'm saying?
Right.
It's like, okay.
Then it's going to reject it and bounce.
Exactly. That would be your buy setup. And if we go over to the GLD, just so if you're in front of your screen and you're dealing with equities, what you're going to see is that your first 10-minute bar in the GLD had 900,000. We have 600,000 here. I like to see a lot less than that when you're going to buy in, because when their exhaustion moves, folks, down at the lows, what normally happens is you get down there, it'll tease you a little, you bounce, you stay up for normally 45, 50, maybe an hour and a half, and then bang, there's one more smack down, and they love doing that with gold, by the way, so the deal's not there yet, but go ahead.
I was going to say another important thing to remember here on gold, and this is this is an interesting thing too, is gold's rolling over right now on CME. It's in August, right?
Exactly.
But what you got to remember, and this is just a tip to bring up, is Nadex, because they have weekly contracts, they can't roll over midweek. Usually.
I know.
So you're actually on you got to sort of like simultaneously watch both of them to get that real clue on volume. You want to be looking over at that August contract.
Yes.
But you need to make sure that you're actually trading looking at the June contract itself as well.
Exactly. Which, that piece of information, folks, is absolutely crucial. And, look at this. Someone just bought one. I love it. Okay. You know what? You know what I found was interesting here. Now, have you seen this before, Darrell? Normally, right when we're trading this, and this might have to do with the rollover. Normally, on the bid and offer, there's been like 20, 30 bid and offer. There's only 4 and 4 on each side here.
Yeah, they're being taken out right now. So.
Yeah, no, I know.
The commodities have been a little bit light lately. I know they're going through a whole transition because they're adding on like 2 more market makers.
Okay.
So I know now the FX has picked up dramatically.
Okay.
The indices have picked up quite a bit.
Yeah.
I know the commodities have seemed to back off a little bit.
Okay.
But now oil has plenty. I trade a lot of oil.
Yeah, oil
anyway.
has plenty, right. And it doesn't mean you can't go out there, folks, but this is unusual because, if you remember a couple weeks ago we were trading the gold, and we were whacking them on each side for 10 or 20. Well, that's what maybe they got burned so bad. That one day we were on there. I was cleaning up. I made $4 or $5 grand, and I know we had a lot of people following. You know what? They probably took all their money, and they're all crying to their weird,
mommy right now.
I get a feeling that because I haven't traded it since that day, and if you trade that contract. In fact, Jay trades that contract. We can see
we went in hardcore on that. We were knocking the crap out of him.
And so what it means, folks, is that when you're 20 on each side, you take them off. You take 10 or 20, whatever you're taking off, right?
Right. And I'll trade 100 contracts at once.
And they reload them. Right now, it's only 4 and 4. You can go in for more. You can split this bid. I mean, you could, it's 147, 148. You can go in 147.50, and you'll be the bid or the offer. So. It's intriguing, man, no doubt. So let's go over and take a look at this again. The Q. This is going to be amazing. If in fact this baby can, because right now the bearishness is pretty amazing in gold right now. It's almost everyone's just throwing it up. You know what I mean? So, with good right too, by the way. Yeah, we'll see. So it's got a small bounce. We're at 46. The low's 44. But that spike is still a little too much. This thing will back off again. The S&P, the S&P, that just wants to go to another high. And by the way, folks, okay, the longer you stay at highs in the S&P with no juice and the rest of these are done, the farther the correction is going to be. That's what it really comes down to. Particularly, when you look at this S&P, we've already had two decent ones, but of course it's the ever-ready bunny. It just runs right back up. Bonds themselves, people can't figure out why bonds want higher price, and that environment. Look at bonds are setting up another ABC up. The correlation for ABC structures up, folks. When you see multiple ABCs up, and bond market has been doing it over and over again, man, that's a market that wants to go higher. I remember Adobe, and what was it? It was Adobe and oh, that's right. 3Com's not even around anymore. It was 3Com. No, Comms. Someone bought Comms, right? 1 second. Yeah. No, 3Com's there. That did AMAT. It was AMAT. AMAT and Adobe, folks, did ABC structures up for a full 2 years straight. 2 years. And it never did a 0.618 retracement. That was from 97 to 99. And I know, it was absolutely amazing. It was absolutely amazing. And what you do have here with the bond market, that baby has been on a tear, but this is the third ABC structure that it's done in the last 6 months on the way up. Soybeans, huh? Let's go look for soybeans for John in the den. So let's see. Soybeans, where are we? Soybeans. So right now, SN. Watch this. S. Soybean active contract. Let's see what. Oh, that's interesting. So soybeans right now, you're at 15. Yeah, I like this trade. It wants to go test 1536. When you get the beans, that's a high volume. If you're watching this, folks, I have the Taz software up. This last buy he nailed beyond belief. Down at that 1446. You get a high spike. It's going to at least test the 1536 area. That's the way that's set up right now. It has 127,000 contracts at that high, which is pretty cool. No doubt.
Let's see here. I'm trying to. Yeah, see, oil's just bouncing, hovering right around that 1 deviation mark right now. We got gold is bouncing. It's coming on up.
You gotta love it, man. Look at that. Okay, GCQ4. I'm telling you, man. If
now, what are you targeting? Because there's different ways to play this game. Which one are you targeting there?
With gold, still,
I mean, you only got to a 130. You know, it's a Friday.
And
it's tough.
That's why the volume. I would let it hit this low again. I wouldn't trade this right here.
Back it up.
This is how it normally happens. What normally happens.
You're basically thinking Friday. It may if it don't go and gets that last spike down, it may just end up oscillating all day. You may not get nothing out of it. No,
if I missed it, it's possible. Listen, it did 6,200 contracts versus the 9,000. I thought it looked like it was going to do more on that 10-minute. Okay,
right.
So that's 33% less. I still don't like that. Really, do you know what I mean? Most of the time when you you're hearing two different things. With the gold market on a Friday, okay, they can turn around and they're not going to make it this easy. They're going to. My take is they're going to nail it one more time. Now the nail of one more time, what I'd like to see is fast price destruction with lighter volume in the 6,000. That would be the buy. That would be the buy, and then the price projection would be 1249. And where I'm going with the 1249, if you're at 44, the 1249 is only the low of the first spike down this morning at 0810. What the contract actually should do is go to 1261, but I can't see that in 2 hours. You see what I'm saying? And the 1261 I'm getting, folks, goes from yesterday. That high spike with volume has juice, man. So that's going to get, that's the range right now.
Right. Okay.
Which is really cool. I mean, because that is a monster range, folks, inside gold when you're dealing with 2 or 3 hours. What you don't want to be doing, there's no doubt, we're at 10:48. You don't want to be handling anything in the marketplace after 11:15 today. Don't even think about it, folks, okay? Everyone's going south, man. If they're north, they're going south. If they're west, they're going east. If, it's just summer started, and they'll flatten this market out beyond belief. That's it. Whatever it is at that point, that's how it's going to be. So.
All right, let's see here. What else? You got anything in the indices you're seeing moving around here?
If we go,
we started off there earlier today.
Let's take a look. I want to bring that oil market back up. So CLN4, because we could set this up for Monday morning. Okay, so this is interesting. Oh, look at this. Okay, it wouldn't be today, but this is interesting. So you got oil testing the lows again, and you're going to see that there's not enough juice to blow out those lows. If you first go down, 10 minutes ago we had 35,000 contracts that hit the low. This one here, it'll test the low again, which is 102.69. But there's not enough to blow it out. The last time we had real volume down was at 0900. Now it's 5,400 contracts, and then we had the spike. See, if you get a spike up versus down, folks, you have to take it and look at the spike and say, okay, hold it. We got the spike up. We got something happening to the upside. You stay right there, folks. Darrell and Tom O'Brien, we appreciate you growling a problem with us out here. The Dow Industrial's down 26, Nasdaq's off 5, S&P's are off 2. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Mott and Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, at TFNN, we do 9 hours of live programming every trading day, 9 o'clock in the morning, 6 o'clock in the evening. Get it right on your cell phone. All you do on your cell phone, folks, put TFNN.MOBI. You can bring us anywhere you like. If you want to get Tiger TV, just put TFNN.com in your browser. On the right-hand side, you see a box with devices. Hit those devices. Tiger TV will get delivered to you. You get the audio plus the video. We're talking with our man, Mr. Darrell Mott. We're talking the Nadex products out here, and we take a look at the indices themselves. So here, let's go over the S&P, because the ever-ready bunny here with the S&P, she's going to make a run to the highs out here. Not that I want to trade this thing, but when you do take a look at this, they're going to force this thing in here, which is, it's the end of the week, it's the end of the month.
Right.
And, they did that nice jump up yesterday at 2:30, and I suspect, they're going to try to pop this up again. Right now, so at 19.25, which was the high at 10.10, folks, that has volume, so that's going to get tested. We'll see whether they can take it up and over it, do a nice spike high going into the weekend. So
right. I mean, they're pushing those highs every day, and I mean, there's not really resistance up there.
No,
that's the whole point, right?
No, exactly.
Exactly. There's nothing in the way to slow it down, so it doesn't take a whole lot of volume
No.
And I mean, are you going to be crazy enough to fade into that? You know, so
not,
I mean,
right, not right here. No.
Yeah.
No. Okay.
So I mean, you got to start hitting. Now there's going to be a lot of pretty stops going down.
What would happen
when somebody
is this.
does decide to pull it back, then that's when it's going to get fun.
Right. What would happen, folks, when you have something like this, we crawled up, and this is going to be a spike high. And what a spike high specifically is that it'll spike up intraday dramatically, not in a small way, and then you'll see the thing just crash. You know, and you know, if you were around in 2007, that was one of the biggest spike highs that I ever seen, and the biggest crash I ever seen. You know, it was just, if you were in front of a machine, you just never seen anything like that in your life. I mean, it was the spread that day. I think the spread was 40. I think the spread was 85 S&P points. I mean, it was amazing. I was sitting in the exact same seat that I'm sitting in right now. And I had to call my son in because the aspect of...
How wide was it?
It was about 85 S&P points. In fact,
wow.
It was amazing. I mean, it was... I was saying to myself, you got to be kidding me. And what you had then, folks, you know, if you were trading these vehicles, the direction shares and the pro shares, at that point, they have different margin requirements then, but what ended up happening... Then, okay, they changed the margin requirement afterwards, is that it was the same margin requirements as an equity. So you could have a 3-time ETF and only have a 50% margin on it. So you were actually, it was a better vehicle to trade than the futures. And I had thousands of them. I mean, thousands. I think I had 45 to 50,000 of them. And I was sitting here, and it was like, you got to be kidding me. I've never seen anything like it. It was just rolling, man. It was like, you got to be kidding me. It was...
Beautiful thing.
It was a beautiful thing, man. I'll tell you what, it wasn't a beautiful thing in the spike, because when the spike is coming in, I'm saying, oh,
that's
man.
when you're having a heart attack.
Oh,
yeah.
It was intense, man. It was intense.
Nice.
You stay right there, folks. We got our man, Mr. Basil Chapman, coming up next. Then Nico and Paige are going to make you healthy. Darrell Martin's going to be coming back, making your money. David White, and we'll be back here this afternoon. Thanks so much for being here, folks. You have a great day and a safe day. You stay right there, our man. Basil Chapman's coming right up.
Good stuff.
Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.